The story about Apple is that it made the news last week, and I don't think it's over, and this is our largest position, and I think we have more room to go with this company because they have an up-and-coming sector, which is the services that they provide. These services are growing at about 30% run rate. The company's goal is to get to $50 billion in services alone by 2021, 2022. And that will reduce their reliability on the iPhone, which is still 60% of their business. If you give them market multiple or a little premium to market multiple, and remember, they still have a quarter of that company sitting in cash, which is about $250 billion. You take out the cash, it's not an expensive company, growing still at 17%, maybe 3 times faster than the average company on the S&P 500. A company like that with pristine balance sheet, cash on the books, paying dividends, buying back north of $50 billion in shares. So $1 trillion is a great story for Wall Street, but I don't think it's over. As far as the economy, I do not see a recession with over 4% GDP growth rate, as long as inflation is in check, 2.1%. I do not see a recession as long as the Federal Reserve is not becoming too aggressive raising rates, which means I think we have more room to go with the stock market. When I see companies growing their corporate earnings on average 17, 18% year over year, that also doesn't indicate excessive valuation or exuberance. We can't finish the Monday morning meeting without talking about tariffs because it's all the time in the news. The US is now talking about imposing $30 billion in tariffs. The Chinese are imposing tariffs on us at 25% to the tune of $30 billion, and we are on them to the tune of $30 billion. In that scenario, the effect on the economy is really minuscule. Now we can escalate that very quickly to $200 billion, as the administration already indicated, $200 billion in a 25% rate. And the Chinese already said if that is the case, they're going to go to $60 billion in retaliation at 25%. That scenario also doesn't materially change much as far as the global economy. But then let's talk about the worst case scenario. In the worst case scenario, we are in full-blown trade wars with the Chinese, which means we impose about 30% tariffs on $505 billion, because that is the trade deficit the US has with China, $5.5 billion, and they retaliate to the max, which is about $130 billion, and they impose 30%. So let's assume now, worst case scenario, $130 billion the Chinese are taxing us at a rate of 30%, and we are taxing them in $505 billion at a rate of 30%. In that case, according to different analysts, the effect on GDP growth rate will be about 1 percentage point. The Chinese can handle that to much lesser extent. They are capped out at $130 billion, and we can go all the way up to $505 billion.